So do y'all know the 3 elements of a liability without looking?
What do you know?
Something you owe.
Something you owe. When do you owe it?
It depends.
It's technically now. So the moment that you create this liability, it is a present obligation.
Oh.
Even if it's like a notes payable where it's like you're paying interest for like 10 years or something like that crazy.
But think about it. No matter what, until you pay it off, you owe it now.
Fair enough, yeah.
You don't need to pay it off now, but you owe it now. Kind of deal. What about, why do you incur the liability?
Because you haven't paid it.
Because of a past transaction.
A past transaction.
So it kind of goes, a lot of liabilities kind of go in a timeline. You have what caused it in the past, your present obligation, and what do you think happens in the future?
Hopefully it's paid off.
Exactly, future payment.
The first transaction.
It's single, but I did. So yeah. Liability occurs. There's accounting reason not the best at spelling. So it occurs because of a past transaction, creates a present obligation, and we pay it off in the future. And when you don't meet any of these requirements, you don't have a liability technically, because you have no debt. So do you guys know the best way to know if something and an account is a liability? What kind of keywords do you look for within accounts?
Oh, like you owe it?
You owe it, but that's a definition. We're looking for like what kind of accounts are liabilities?
Payables.
Payables. There's one more.
Unearned revenue.
Unearned. Payable, unearned. If you ever see an account that says either of those, light bulb in the head.
Liability.
Liability.
I always forget unearned revenue is a thing.
So, what are some current liabilities?
When accounts payable.
Accounts payable.
No payable will be long term, right?
Yes. What can make it short term?
If you're paying a portion of it.
Yep, the current portion due within that year. So if this was, and you guys will get to learn this more in chapter 10, whenever we're paying it, something like a note payable where we're having like a payment plan, or a mortgage where we have a payment plan, whatever we're technically paying within the year is considered a current portion of the debt owed. Any others? That's it. Just payable is one.
Forgot about that one.
We talked about it just a minute ago.
Unearned revenue.
Unearned revenue.
Oh.
So we're gonna keep moving past this and not considering the note payable with the current portion owed. What are some journal entries you'll typically see? We'll go with accounts payable first. How do you accrue account payable? And you can throw anything out there.
You buy like $50 for $100. Your $100 cash is getting credited. No, something wrong.
So
Yeah, I lost my train of thought.
here's another key with accrued liabilities. Will we ever have cash when we accrue them?
No.
Cash is not there. Cash is basically, it's in the back of our mind for the future.
So it would say like on account, or would you just assume?
It would be something saying like on account or terms, but what would be a journal entry that we could kind of think of?
Debiting accounts payable
Now, does that increase your account payable or decrease
or
it?
decrease?
You would
Credit it.
credit account payable.
Wait, so what would you,
You would debit what you're getting.
oh, like the merchandise or whatever?
Yeah, we'll just say, all right, we bought some merchandise. Flashback to chapter 4. So, what about wage payable? This one has a very more specific one. Accounts payable, it kind of depends on what you're trying to buy. Wages payable, there is a very, very specific instance and reason why we use it. And that's typically when we have to pay, well, when we owe our employees money, but we're not scheduled to pay them until later. So like the year ends, but we pay our employees every week. And the year ends like a little bit in between when we give them their money. So what kind of journal entry would we typically put?
Wage expense.
Wage expense, debit or credit? Perfect.
Wait, is salary, is that a thing, salary paid?
Yeah, it's basically the same thing. Wages payable is just more typically used for an hourly employee, while salary payable is usually used for a
Annual.
salary. Yeah. But in all honesty, they're both pretty interchangeable. It just means, hey, we owe our employees money.
So would it be the same with the expense thing, like salary expense?
Yep, salary expense, salary payable.
So in turn, would you credit wages payable? So,
Yep.
okay, makes sense.
Basically.
Okay, now expense, even though we're already like halfway throughout the year, expenses starting to make sense to me why it's a debit now.
I'm glad. It's when you first get into accounting, it's terrifying because it's a brand new language and nothing makes sense. But as you start going through the years and going through the word, things start falling into place. That's why, honestly, chapter 1 and chapter 2 are the most important chapters in the world in my mind, in my heart. Chapter 3 is next up there because chapter 3 kind of goes over things like accrual entries, and it's kind of reviewing everything, but it's still incredibly important because that's like solidifying your country. What about unearned revenue? What kind of account would you typically see for that?
Credit unearned revenue.
Credit unearned revenue. What do you typically, because there's only 2 debits that you can ever choose for this.
Would it be cash?
Cash. Actually, no, there's only 1 debit. Ignore my thought process. Because if you have accounts receivable and unearned revenue, technically nothing's happened and that's fictional.
Yeah.
So this is
So just cash.
Wait, why is it cash though?
Hey, can you mow my lawn next week? Here's some money.
Oh, but you haven't done yet.
Yeah.
Okay.
Exactly. We have not done anything yet. That's why cash is the only thing. Because it's very different. Because for some reason, whenever you do like a transaction, you'll typically have accounts receivable and cash with the revenue. But with unearned revenue, it will only be cash for the pure factor that if I say, hey, can you mow my lawn next week? I'll pay you later. Nothing's occurred between us. We've just talked about it and that could fall through. There's no legal.
Yeah.
There's nothing legal saying you're gonna mow my lawn next week and there's no cash binding
There's
you.
no contract, pretty much.
Yeah. So is there something very easy to note about where these liabilities go to when we accrue them?
Most are going to be credited.
All of them will be credited.
Yeah.
Now, what's the way to how do you reverse it? Like, let's say we'll take this inventory. We paid off our inventory. How are we going to record that we paid it off?
You debit the liability.
Debit the liability. What are you gonna credit? All right. What about wage expense and wage payable?
Same thing. Is it?
Same thing as like saying
You
wage
wouldn't-
payable. in cash?
You would debit wage payable, because assuming you've already paid the wages, that means you have
Oh.
nothing else to pay.
You just
But what would you credit?
credit wages this?
Well, no, you wanna, wage expense is basically, we're not gonna ever credit that. We're never gonna reverse our expenses unless we didn't incur them. Did we incur that wage expense? If we incur that wage expense. So what does that mean for a payable? How do we get rid of the payable? Because technically we haven't paid them until,
Oh, cash.
now this one's a little different. It stays the formula, but it does something a little different. How do we reverse an unearned revenue? Or how do we fulfill it?
You credit revenue or debit revenue?
No, you're right first, you credit revenue,
Wait, what?
because you're recognizing that revenue. You're saying, all right, I mowed your lawn,
Mhm.
I've earned my keep.
So there's no cash.
Nope.
Well, you already have the cash.
Yeah, cash happened here. This is the only, that's why I boxed this one, because it beats the formula, because I said at the beginning, usually when we incur liabilities, there's no cash. That's not true for unearned revenue. Unearned revenue is all about cash. But whenever we recognize that there's no cash, because what we're doing here is saying, all right, I did the service, I'm done, that liability is over, no one can sue me now,
Mm-hmm.
kind of deal. Does this make sense so far?
So the one that you corrected me on, that won't be unearned revenue, right?
Exactly. Every time someone walks by, I'm like,
Yeah, I see the shadow.
so we're gonna move on from the basics. We'll move it up there for now, in case we wanna return to them. And we're gonna go to sales tax. Speaking of taxes. So, with sales tax, there's always a formula, and typically you're never going to break through that formula. And it always, all right, someone bought our merchandise, we had sales tax included, and so we have to recognize and put things into the categories. I'm going to put a practice problem. As I know we'll miss those.
I'm trying not to look at my notes, but I
I
don't
don't have notes to look at. I just gave him my best shot.
Okay. That's why we're gonna go over it. Oh, don't worry. She's part of economics and
Oh,
business.
okay.
She's not
I got her
accounting.
off the tutorial.
Huh?
I got her off the tutorial.
She's pretty great. Alright, so whenever you go through these problems, you always have to make note of the important things. One is okay, how much we sold it for. Two is how much is taxed. Now the question, is this the number, the full number of what they pay?
No.
Nope. What is that number?
That is just the price, right? before the
That's just the price of the things they sold.
But also, what account would that go under?
Revenue.
Revenue.
Yeah, wrong.
Revenue and sales, could you put either one? Or
Revenue sales, either one works, as long as you know, hey, it's technically the same thing. So we're gonna put a credit to our revenue. All right, what are the, let's gonna leave that out for now. It's not gonna go. What other accounts are we gonna be dealing with?
sales tax.
Sales tax? Sales tax what? Sales tax payable. Now, how do we find out our sales tax payable?
Multiply it by the sales tax and then.
Yeah. me do a calculator instead of doing mental
Why are we
math.
debiting revenue?
We're not, that's a credit.
Oh, that's correct, okay.
I just, it's in the middle of the screen, in the only
Okay,
thing there.
You're doing 500.
500 times 0.083. Yep, 4125. So, as a journal entry, is this completed?
No.
Nope. All right, so what's next?
Cash.
Debit or credit? Debit. And for how much?
4120.
541.25. That's the most important thing to know about sales tax. Now, how do we pay off the government? Because we don't get to keep that extra money, sadly.
Mhm.
So what's the usual journal entry when we pay back the government?
Sales tax payment.
Yep, you debit sales tax payable.
Income tax expense.
Nope. I see where your mind's going now.
The credit.
Credit cash. The whole important part of this is that we want to just get this off the books. We want to say, hey, here you go, IRS, please take your, I can say,
Money.
please take your money and leave us alone. This is exactly that.
A question like that, would we have to put that bottom portion for the government onlys?
If it's asked, so if it's just asked, hey,
This is what happened at transaction.
Yeah.
That's it.
so if you just get this saying, hey, what's the journal entry to record the sale? This is to record that sale.
And then it goes on to ask.
Yep, and if it says, hey, put, what's the journal entry to pay back the government? Paying back the government. So now we'll take this. Any questions so far?
Seems straightforward.
Now, chapter 6 and 9, especially going through like the rigmarole of chapter 4 and 5,
Mhm.
typically end up being easier, especially because they're much more applicable.
Yeah.
Like we all deal with taxes, we all deal with owing people money.
Mhm.
Well, hopefully not everyone does, but you know what I mean. And it's same with like the chapter 6. That one I find a lot of people get very easily because it's dealing with cash. And a bank reconciliation, knowing that, you're able to do that as a person and not as an accountant. You're able to say, okay, I know what I've spent,
Mhm.
and now I want to look at my bank reconciliation. Because you're able to figure out things from that. All right, now we're on income tax.
Oh, that's what I was looking at.
Just one step off.
Yeah.
So this one's pretty straightforward. I'm gonna write a question on the board and you're just going to show how they record the accrued liability and show me how to record when you pay back to the government. So.
Mhm.
What part are you stuck with?
Is there like a percentage that we're supposed to know?
Nope. This one's very straightforward. It just looks so easy. It might be troubling. So think of how to accrue a liability. We were talking about it before with wages. Think about wages because this is very similar. And we're recording when we accrue this liability and when we pay it off. I think you're on the right track though.
What am I, okay, I know there's 2 journal entries you said.
Mhm.
What numbers are we using for the second journal entry? Is the same thing?
Same thing. One is when you accrue it, one is when you pay it.
Oh, okay.
That makes sense?
Well, now I know it's the same 2 numbers. I just
Yeah.
know that's just gonna be.
Yep. This is
I'm just
all
trying to
that.
figure out the names.
Yeah, no, the math is simple for this one, which I think throws a lot of people off, and that's why I want to cover it still.
Mhm.
Would you use a cash account? Use one too?
For the first journal entry or the second one?
The first two?
Not for the first one, the second one, yes. So when we accrue it, we don't use it, but when we pay it off, we pay it off. Let's go through this. I almost grabbed the real market for this. I don't think they'd appreciate that. So. For the first journal entry, what do you guys think it's gonna be?
Income tax expense, 6,500, and then a credit to income payable.
Perfect.
Isn't that? Oh, yeah, it is.
And how do we pay it off?
Cash.
Income tax payable debit, and then a credit to cash.
That's it.
What would the date be for the second one?
So, for the first one would definitely be like 12/31 because it's the end of the year, but here would be sometime in the future. Typically for corporations, they have to pay their taxes March 15th. But the thing about it is, you guys don't need to know that for this class, unless you're accounting major. Are you accounting major?
No, well, business, but not really accounting.
If you go into, I don't think you guys are gonna be doing taxes for businesses, so this is irrelevant, but it's just fun facts
I thought taxes were due on April 15th.
for normal people. For corporations, it's due March 15th. So the other ones that they have here are the short-term, Sorry, I'm tongue-tied today. I don't know what it is. Short-term notes payable and interest payable. So interest payable is important, and it's basically the same thing, interest expense, interest payable. Knowing that you have those and that if you don't pay the interest off right away, you have a payable for it.
Yeah.
This especially goes with, and when you guys go into chapter 10, you're gonna realize, especially with notes payable, you don't pay the interest off as you go. You actually
Yeah.
pay the interest off at the end of the day, along with your note payable. So throughout like the journal entries, when you're going through and doing like a note payable, and we're just gonna do a small little thing. You typically will get cash for that note payable. Well, not cash, but like, you'll get something. We're just gonna say cash for now. And then later on, it's like January 1st. When you start accruing interest, you'll start saying, all right, interest expense.
And then the payable.
Or more than likely, 12/31, because that's when you start the year in and you need to say, all right, how much interest did we accrue? So like, if this was a 10,000 note that we're going to pay off in like 3 years with 6% interest per year,
Mhm.
an annual interest rate, you just kind of say, all right, $600.
Mhm.
Does that make sense?
That's $600 every year, right? For 3 years?
Yep, every year, 3
Yeah.
years. So then we'll say things like, if this was a semi-annual and we had to record the interest expense for a semi-annual, and you guys don't need to know this for chapter 9, but you're gonna need to know this for
Chapter
chapter 10. And it just correlates with this so well. When you're figuring out your interest expense, cut this in half, times this by 2. Because you're finding you're getting interest 6 times throughout the cycle.
Mhm.
For 3% each time. And a lot of the reason why they do this is because your interest
Oh,
expense
for
is
semi-annual, I got lost, sorry.
so for semi-annual. So we'll say again, like the numbers for 6-1 are a little different just because it's going to be accumulating more interest. I'm not gonna get too far into this just because this requires amortization charts, and I'm gonna wait till you guys get more into chapter 10.
Mhm.
Okay, that's why I was confused because doesn't the amount of interest that you pay changes, right, as you pay it off?
It does, but it also changes depending on the annual or semi-annual rate of interest. If you have semi-annual rate of interest, you're getting a lot more interest every year. Like this
Mhm.
number will probably go up at least $100 because you're getting, well, times that 3% on here and it's 300.
Mhm.
And then you have to times it by 3% here again. So it'll be, I think like 330. No, 309.
Times 3%?
Yeah.
Yeah, 309.
So instead of 600, still not 100, but still like 609. And it just keeps going up and up and up.
Mhm. And that's twice. Wow, so that is way more interest. Yeah.
I would hate that.
Who the heck would do semi-annual?
Oh, a lot. In fact, a lot of credit card companies do monthly.
Oh, well, yeah.
So let's see. The current maturities of long-term debt. That's basically, we're talking about the current portion of a long-term debt that's due.
Mhm.
Okay. I guess that answers my question, because there was one question on the homework.
Oh, is it the one that's like, okay, what's the, yeah, no, that's why I like to use that word because Connect has that specific wording and it drives me up a wall.
And I didn't know if that one was considered short term, so I didn't put it, no.
So. Next is payroll liabilities. Miss Blocker's class does journal entries for these. You see your class does not.
Or what?
Payroll liability.
Payroll liabilities. Okay.
It's almost-
This is pretty sturdy and closed. Oh, make sure to double click those so they're empty.
Oh, I didn't know.
Otherwise, I'll mark it as not completely answered. So payroll liabilities is figuring out, okay, gross pay, figuring out, okay, how much do you take out of it? So gross pay, is that, do you take out the expenses?
No.
No.
Nope. You figure out, okay, what's the total pay? And you just run with it.
Well, you own those expenses too, right? So why would you take them, or wait, did you say take them off? No.
Yeah, so expenses with payroll, you take them off, but only after you get to that gross pay.
Okay.
We've gone through, and I'm just gonna show off everything. We got like sales tax, got income tax, we've talked about little note payables.
That's
and
big.
Got through the beginning,
That's just like,
basics.
yeah.
Our basics of bread and butter for this chapter. If you have any questions, feel free to throw them out. Otherwise, we're gonna start with payroll liabilities, which I'm gonna go, for Ms. Yeager's class, I'm gonna go really in depth because Ms. Walker's class does journal entries for them. I wanna make sure you're able to get those journal entries. It's a very self-explanatory, but still, they typically, it looks a lot worse than it actually is.
Mhm.
So we know that gross pay is the total amount of compensation. So that's everything that you get as an employee before you get any of the taxes or deductions. So we'll start off that, and we're just gonna build a problem as we go. So we're just going to work with this first. How do we find his gross pay?
Well, it's gonna be like 40
Or
40 times 50. or
17 times 40.
and then you do 15, no, it'd be 17 times, was it 1.5?
Oh, yeah.
Was it 1.5 overtime?
Yes, so are we just doing,
So it's gonna be 17 times 1.5, and we gotta multiply that by 15.
15.
perfect. Let's hit these.
I got the baby calculator.
All right, baby calculator, tell me what we need.
Okay, 17 times 40 is 680.
680?
Yep, and then let's see, 17 times 1.5 times 15.
Yep.
382.5.
We're going over chapter 9, we're at the back, it ends doing chapter 9, current liabilities. Right now we're on payroll. And we're going to go a little more in than you need to do. So as accounting majors, it's probably important anyway.
Yeah.
So we're gonna learn how to do the journal entries for these.
Can you see our major, like, if we put the tutorials? and everything?
Yeah, I am, but I like to talk to people about it. That's why I like to ask you guys what your major is instead of just looking, because that way,
You have to be surprised.
I like to be surprised.
There you go.
So then you would just add those two together, and that's how much you made that week.
Yep, that's how much you make.
1062.5. Now time to start doing taxes.
So, we figure out that much. We then have to figure out, okay, what else is there? Which I don't have anything else on here, so let me start putting some things here. And we're just gonna start building this as we go.
Time to lose half my paycheck.
Exactly. Don't you love it? Funny enough, you still make more than if you are a self-employed. Be a self-employed, you have to take both. You have to take basically 2 times as much of Social Security and Medicaid.
So I'm getting rid of 60% of my check.
Yep.
6.2%.
Yep.
These percentages are important for everyone.
And 1.45 for what?
Medicare.
What does that say after like 40 hours and what?
So Dave works 55 hours a week and is paid $17 an hour for 40 hours. And it 1.5 for anything over. Sorry, my handwriting got very bad over there.
What happened? What's
It's 1.5
What- For what is the $5
for
for?
United Way.
Oh, so what's it called? Donations.
Donations, yeah.
Time to start mathing.
Yep. So you have to figure out his net pay, and then if you got, I know you're gonna need to know how to do the journal entry for this,
Yeah.
but y'all are free to practice journal entries if you want.
Are we doing journal entries on right now?
You're not doing journal entries for this, but yeah, block this classes.
Wait, do we have to round this?
Dang.
Oh,
So,
that does not.
no, you don't have it wrong, but I do wonder, you have to figure out, okay, 6.2% and 1.45%.
Yeah, I just multiplied by like an 875.
Oh, I just.
So I'll write 875.
The percentages are coming from.
Wait, I might put the
these
wrong.
rows, right?
percentages.
Gotcha,
Let me
okay.
just double check it.
Like I said, this seems very intimidating, but in all honesty, it's categorization.
Mhm.
So you multiplied like the percentages by how much you're getting get, like your gross profit?
Yes, so you're taking like 6.2% out of 1,062.
I have a question. So I checked this one and I put notes payable.
This is where it's current portion of debt,
So what would it be then?
current portion of debt.
Oh,
Yeah, I
right.
didn't know it was that. I put
Wow.
that's payable.
Yeah, that's what I put and I got it
Up,
wrong.
okay, yeah, round it to first 2 decimal
All you
places.
gotta do is just like.
Payable. Wait, what am I debiting?
What are you debiting? Debit here is gonna be more easier than the.
Okay, wait, am I the person who's paying?
We're all the
payable, or-
company, we're the company.
We're the company? Okay.
We're the
what-
company.
Okay, so did we buy something or did we sell? Wait, hold up.
So Dave
Wait.
is our employee.
Wait,
Dave's our
okay,
employee.
Dave's our employee, and then we're dealing with his stuff, okay.
Yeah,
got
we're
it.
dealing with this stuff. We're getting the journal entries to occur paying him and
Okay.
taking all the tax. So think of it this way. What do you tie with a payable usually?
Cash.
Yeah, that's what I thought.
No, not cash and not accounts receivable. Accounts receivable and cash
Would
are
be
it.
like a tax expense.
Tax expense makes sense, but what kind of expense makes more sense when you're paying someone?
Oh, wage expense.
Wage expense or salary expense.
Okay, so it would be just wage expense like there?
Wage expense would be, yep, is that wage payable?
No, that's wage expense.
Okay,
That's wage, and then I accidentally forgot to write another E.
it just looks like wage greater than P.
Okay, I have bad handwriting on my bad. You don't even.
No, I
roast
do
me
too.
like this.
I mean, look at, I can't talk.
I think I win the medal though.
So you have wage expense. So That's gonna be your debit. How much do you think your wage expense is gonna be? Because that's gonna be your anchor.
Oh, okay, so for this one, okay, so this would be like 106.25, right? Just because I had to bounce out between the two.
There's gonna be a lot more for your credits.
Okay, so that means I'm just gonna add all this up then.
You're not adding all that up, actually. Each one of those is a separate journal entry.
Okay, crap, well,
Do you want us around to the nearest set?
Nearest decimal,
so
like
I'm
nearest two
missing
decimal
something
places.
then, so it'd be like 106.25.
So we're gonna start going through this.
Son of a gun, this is gonna be fun for me.
Not 106.25, 1062.50. So
Oh, whoops.
you're good, you're good. Like I said, this one, it's intuitive once you do it. And like I said, Miss Yeagers doesn't really teach this one, and since you missed the class, Miss Blocker goes through it more. We're
I'm
gonna
gonna just erase
work this one agree. Put a journal entry here. The first thing we want to do is take salaries expense.
Okay.
Salaries or wage expense, because this is going to be what I like to call our anchor. And you do that for how much ever you owe Dave. Say, all right, there we go. 1062.50. So that's our anchor. This is gonna be the only debit we have. Now we're
Oh.
gonna take this
Wow.
one by one. So first things first, we have our 10625 for our income tax and withholdings.
Mhm.
So with that, we just put that as income tax payable.
Wait, okay, so, wait, is it income tax there? No. Is it just like withholding tax? It just means that there's another word for income tax.
Same thing, honestly. This is like the paper say of it, but as long as you have something that ties back to this payable, you're good. Because that's just indicating, okay, this is the type of account it is. Income tax payable is just the baseline structure of what I've been given. So,
Salary expense is the same thing as wage expense, right?
yes. So the only difference is if it specifically says this is a salary employee versus like this is a wage employee, otherwise salary and wage really is interchangeable, as long as you know you're paying your employees. It doesn't really, like, the only time it ever really gets nitty gritty is in the real world, when you have already set standards for accounts. So we're then going to start looking at social security, which we know, all right, 6.2% of,
Yeah, 6588.
Wait,
so
what I missed
6588,
Mhm.
Oh, it's
It's
six.
being rounded.
Oops.
rounded up to like the second. So you can put this anyway, you can put social security payable, you can put FICA social security payable, as long as you say, hey,
Oh, which,
We owe that.
wait, what's the difference again? FICA
we
and
owe
this
that, huh?
This FICA on what?
FICA, so FICA is Social Security and Medicaid. So putting like FICA,
SS.
yeah, FICA SS payable. This is what it said. I think I just like wrote this completely wrong. Payable.
Playful.
Oh my gosh, get out of my head.
The same three brain cells just working as hard as they can right now.
Yep.
The second Leica.
That's the social security one, right?
FICA is Social Security and Medicaid.
So
what's the-
just
what's the-
distinguish both.
The only thing that distinguishes either one is Social Security and Medicaid,
Yeah.
but
Oh.
they're just basically under the same rules.
Yeah.
What's the other one that rhymes again?
Medicaid?
No, with FICA.
Oh,
What's the other one again that's close with FICA?
oh, you're thinking of FIFO and LIFO.
Oh, I swear there's another thing with FICA though.
No,
So
no, no.
with FICA, could you technically, would it be like against like GAAP to just like put Social Security and Medicaid into the same journal or no? Or the same account, or is that bad?
It's bad because they go to two separate areas,
Yeah, okay.
and especially because they have two separate laws. Social Security, you're taking 6.2%, while Medicaid, you're taking this.
Okay. Mhm.
That's why you have to keep them separated.
So we would just rewrite FICA again,
Yeah, FICA,
tax payable, Medicare.
I'm
Yep.
0.0145.
Medicare, Medicaid.
$15.41.
$15.41.
All right. Then we have to say, all right, he has a voluntary withholdings of $60 for health insurance. So that usually, when you see like these specific accounts,
I knew it, okay, I knew it had, would look something like that.
it genuinely is literally just, all right, whatever it is, slap payable on it.
Okay,
Mm.
okay.
Well, I mean, if we have to pay.
Liabilities on liabilities right now.
Your abilities on liabilities?
No, he has liabilities on liabilities.
What's
right
the
now.
amount of rate?
Just donations, you said?
Yeah, donations.
Tax, anything like a tax
Donation.
thing?
Yeah, it's basically, where as an employee often for these optional payments, they're called optional deductibles, which is over in the notes. Let's
So
see.
would you let them know that you wanna do that?
Yeah, you would have to let them know as an employer, you're gonna let them know, say, hey, can I get $60 taken out of my account and $5 out of this for these specific things? They're never just gonna take it out. Typically, what you'd normally just see as an employee would be just these 3 items. Everything else here is optional deductions.
So Medicare, okay, I know we're like giving them money, but why are they taking money out from Medicare? Even though it's not for us.
That's normal. That's every paycheck you're ever gonna have.
Because you gotta pay for people who can't work Medicare.
Yep, so it's basically, it's federal, it's federal tax. And this is something that is dictated by the IRS. And something that has to be taken out for anyone. As a self-employed individual, you actually take it out by 12, yeah, you take it out twice for 12.4% of your
So
paycheck.
why can't,
Ouch.
just curious question.
Oh, yeah.
Why can't like we have Medicare?
If you're
If
working.
we're paying for it.
Technically,
Quit
their
your job.
technically their whole idea is that you're technically paying for it now to be saved up when you need it.
Something else is getting credited.
There's
No,
one more
really.
thing that we credit. What? Take a wild guess what we credit.
Cash.
Nope,
Fudge.
we're not paying yet.
All that
Wait,
building.
Can I add that up real quick?
I was
I'll
guessing.
add the
Yeah,
two.
go add that. Add that up. Add that up.
I'm gonna guess 126.25.
While she's adding that up.
Is it salaries payable?
Salaries payable.
Boom.
Your
I
winter chicken dinner.
I forgot that you just throw payable on it, it's automatically solved,
Honestly, well, it's not always on it.
relatively
It's
speaking.
relative thinking it's solved.
So.
Yeah, okay, so why do, okay, if there's salaries payable, doesn't mean we, as company, owe that person that much money.
Because that's how much we
Oh,
pay
we're the
them when it's
company.
time.
Yeah, we're the company, that's the guy.
I mean,
who's
they
account-
they deserve the
David,
wage, right?
Yeah, he's the guy.
Are we
who's
not gonna
paycheck
pay our
works.
employees?
Never,
So we
they're
made only that
slave
much
labor.
money.
Yeah, the employee makes only this much money.
Like
That's
so
sucks.
Yeah.
he earns that 1,062.50, but like since he has like all
She
these
barely made any money.
Yeah, this is
Eight-
why people hate taxes. So real quick, what was the number for Dave's salary?
Wait, what do you mean, the payable?
Yeah, the payable.
809.96.
Yeah. No, this is why, and once you get into the work field, this is why you don't get the amount of money you think you're gonna get.
That's why overtime.
Not only that, but I've undersold the income tax payable,
Oh.
because technically you can get up to like $200 to $300 of income tax payable.
I'm gonna
Okay.
shoot
Wait,
myself.
Right.
money? It's only almost
it
1,000.
depends on the bracket, right? Just
Yeah.
We don't talk about it.
Depends on the bracket. So you'll be able to see more when it goes into tax, which I
No,
highly.
not 40
Miss
hours, it's
Blocker is a
55.
tax teacher and
Yeah, but
Mr.
it-
England's a
but
tax
no,
teacher.
like
I
without
took
overtime,
Mr. England,
yeah.
so I could vouch for him. But Miss
I
Blocker's
wonder how much
also
it would
great.
be. Okay,
Which
so
one
how
do you
much is he
recommend?
supposed to make with just his basic 40-hour work week?
Strongly?
Miss Blocker has like a lot of energy, even though I'm taking an 8 a.m. class.
Yeah.
So I think it's kind of entertaining.
She is very entertaining. Miss England is more kind of monotone. I will say I really enjoyed him as a teacher. Working alongside with Miss Blocker though, she's definitely someone who is wanting. Both of them want to help you. Both of them want to get you to the finish line. Miss Blocker, from what I've seen of a lot of the stuff, she's going to kind of throw a lot at you. But at the same time, as an accountant,
680 for what?
you're gonna learn a
That's how
lot.
much without overtime.
Mr. England, from when I took him,
That's almost half.
he's a lot
That's
more,
not- that's
he
not-
teaches
dude,
from
my rent-
PowerPoints. There's no recorded
I think my
lectures,
rent
so
is
you need to
like
make sure you're
$10
there.
a
But the
month.
PowerPoints are fantastic. And his lectures are very interesting.
That's
Like they're very
a little more than
informative.
my
And
rent, but,
his starting
that's
line
before
for the
we-
whole semester was,
Yeah, that's how much-
and it was on his PowerPoint saying, all right, guys,
What am I, this more my rent.
you're going to have questions. And sometimes these questions can't be answered because I will have to tell you, it's the IRS and that's how we live. So he's very
I
good.
like that, I might take him.
Yeah, I've
Miss Walker's been like a big help, especially like with her office hours. I've been to 2 of her office hours and like I was able to like figure out like the answer to my question like 5 minutes like tops. So
yeah, no, both of them like that. That's why I can't really pick. Because
yeah.
like I don't know what her class looks like, but from working alongside her, I've seen the energy, I've seen the dedication she has for her students, and same with Mr. England. I've taken his class, I know how much he's willing to help as well. So it really is a toss of the coin of, I guess, how you feel.
I'll let you
Actually,
know.
After, can I show you my class schedule and can you tell me who you'd recommend for that specific?
Yeah, of course.
Thank you.
I'll let you know Miss Walker is a very good teacher. So when she's saying like it's a flip of a coin, it really is. So it's just like whoever is most available for you and like works with your schedule, and it's like between those two. Like,
Yeah. So
I can only vouch Miss Blocker. So
yeah, that's why I can only vouch Mr. England. But yeah, no. So honestly, like I'm not gonna lie, as accountants, you guys have probably the best professors I've ever dealt with, like in my college career. That's next to my educational major teachers who I absolutely adored. So as far as and especially within this college, I have my own gripes about specific sections, but I don't have any gripes about accounting. Accounting, the teachers are fantastic. And I've adored working with all of them, and I've adored going through their classes. Like in all honesty, you're in good hands. So this is the journal entry, and this is how to figure out everything.
mhm.
And honestly, like I know Miss Blocker has some drills.
Yes.
Highly recommend going through them, trying, and if you ever have any questions,
Just email you. Yeah.
email me, talk to Miss Blocker. But this is generally how it is, where we just take every. It's looks like a lot.
Every liability
Mhm.
payable, and then you just got to equal it out with whatever your salary, whatever's left.
Apply. And that's why it looks intimidating at first because all these numbers thrown at you, but this is why I also like take the chance to like circle things in, highlight it, because it really is just that. It's just saying, all right, this is together, this is together, this is together. This is what we name them as. And like I said, you could be flexible with the naming as long as you know, all right, Social Security payable,
Yes.
and really indicating where it's from.
Mhm.
Because even if you just put like, you can't put tax payable. You can't
Yeah.
just put tax payable. But even if you put like FICA,
Or just Social Security tax payable.
yeah, like that's good enough.
I'm sure she'll like in her work phone, she kind of like writes the possible like journal entry you could use, but I don't think she's very like meticulous about the words. So.
Now, as long as you know what you're talking about.
Yes.
Yes.
Okay, so since this is specifically for Dave, would it be Dave's salary expense or like Dave's salary thing? Like,
It really doesn't matter. It really like, the thing is, this is going into a pool on a balance sheet where it says, all right, your salary is expense. Because there are cases where you're dealing with 3 to 4 employees, where you're saying, all right, each employee makes this amount of money. And so because it makes this amount of money, it gets taxed this amount of money, and we end up adding it all together to equal the same journal entry. It's just going to be a journal entry for 3 people together, wrapped up to get in a bow than just one person. We just focus on one person now because it makes things easier to start off with. And the only big difference between that and other people is just adding them on. There is more journal entry tied with this. That's why too. Not only do you have the salaries you have the salaries part of this, but you also have the payroll part of this, which the payroll part of it kind of goes like this. Your plug is instead your payroll expense.
Does she want to calculate that?
See, no. So this is specifically for blockers, at the same time as counting measures. It's good to know. So you'll have the payroll expense. You'll have your FICA, we're just doing Social Security payable. And FICA, Medicare payable. We were able to get all the homework done?
Yes, thank you.
Awesome, glad to hear. But the extra things that the employer has to deal with is something called FUTA and SUTA.
Mhm.
Federal unemployment tax and state unemployment tax.
Mhm.
And it's specifically for the employer.
That's in our notes.
Yes.
Student?
FUTA and SUTA.
I don't remember that.
It's very small, like at the tack at the very end. And the
Oh,
biggest thing
that's
for
the-
y'all to know is that it's unemployment tax that the employer has to pay for every employee, and it usually is capped off for 7. You don't need to know the specifics, but like in real life, it's like tapped off for 7,000. Every that 7,000 a employee makes, you have to tax that for employment. Same thing for state income tax as well. Not state income tax, state unemployment tax. It's like for a set number.
So not only does it take like for federal, it takes the state.
Yeah.
Yep.
Wow.
But this is what the employer has to pay. So that's why it's like a double-edged sword, because for self-employed people, they basically have to pay this twice.
Wait, but why do they have to pay it twice? Is it because they're not paying taxes?
They're still paying taxes, but self-employed people, technically, they can't have that half and half split with the employer. Since you're self-employed, you are dealing with the full tax. That's why a lot of people go
So you're
for
doing
hourly.
payroll and then salaries too.
So how does
Well,
that, I know like payroll, like what's the payroll again?
So payroll is just like payroll expenses is specifically towards what the employer pays for taxes based on the salaries.
Employer, other than the one that's working.
Yeah, so this is basically employer, this is an employee. So this is all about the employee, this is all about the employer. And the thing about the employer, they pay the same amount for everything, except they also have the FUTA and SUTA,
What's the difference again? I forgot already.
federal and
State.
state.
Okay, got it. It kind of adds up.
I'm trying to figure out, I know Ms. Blocker has the percentiles for FUTA and SUTA, but we're just going to say 100 each for now.
Okay. I'm gonna put a little note.
Yeah, put a little note to see what that is.
What is the 1.45%? Oh, that's Medicare.
Medicare and that's Medicare and that's Social Security.
Yeah.
Both of these are taken out
Oh,
from both the salary and from the payroll. So the payroll is something completely different than the salary.
Yes.
Salaries is all taken out of the salary and lowers what that person made down to this.
Yes.
Payroll itself is taken out of the pockets of the employer. So like the company. Yeah, the company.
So just a little thing. So United Way, is that like nationwide, or is that just like if you want to do it? And
It's an optional deduction, so it
Mhm.
honestly, it doesn't have a name for it, so we just call it United Way Payable, because
wait,
we're
if it's a deduction, would it not add to the 809 or?
it would, because you're taking it out, so